Good morning. Good morning, everyone. My name's Dominic, Chairman. Today, we will have Holger, our CEO, and Tom, our Chief Product Officer, presenting. And then we will have some time for questions. So I'd like to welcome everyone to the webinar today. There is a Q&A button, and feel free to start asking your questions. We will do our best to answer them. What I'd like to do is just go through and give you a little bit of an update of the last 9 months and the CTO, provide a bit of an update with regards to the audit, the AGM, and then Holger and the team will provide an update with regards to looking forward. I think that it's suffice to say that it's been a fairly challenging time on the audit front for the company. There were a number of reasons why the audit was delayed and the company went into a CTO. You'll see that there's a QR code there that outlines, we made an announcement that outlined some of the key reasons, but let me just sort of touch on it, just sort of very, very quickly. There were really sort of 4 core reasons the audit was delayed. One was around revenue recognition in terms of how revenue was accounted for. Second of all, a number of our liquidity providers were not SOC compliant, which is an ISO type accreditation, and which basically meant extra testing needed to be done from an audit perspective. And then there was a reclassification from deposits to receivables. And at the same time, combining that with significant growth in the business. So, the company, very much, went through this particular process. There were a number of macro factors as well. As some of you may recall, FTX collapsed late last year. And what that did from an audit perspective was placed extra scrutiny on any company involved in crypto. And that obviously, that was CPAB in Canada, which then had an impact with regards to how we were dealing with our auditors at that time. And to sort of compound matters, as we announced, our CFO left in October as well, which didn't help the particular situation. So this is obviously a very difficult time for shareholders. We actually understand. Ultimately, very, very sorry for the company being in a CTO for so long. On the positive, the company's now out of the CTO, and as you know, we've recommenced trading on the TSXV. Just in terms of just continuing on the next slide, the AGM is now scheduled for the end of September, so look out for that information that will be sent to you in your mailbox. We have at the same time appointed a new auditor, PKF Canada, who we believe is more fit for purpose. And obviously the resumption of trading on the TSXV, and we expect to be reinstated back to the OTCQX, which is the top tier listing on the OTC. From a macro perspective, I've spoken about it being a fairly challenging environment. Not just in the crypto space, but also outside of the crypto space. And I think it's ultimately BANXA has been able to really weather these headwinds, and it's a testament to Holger and the team and the fantastic job that they've done with regards to weathering the storm. And as you'll see over the next 20 minutes, the business is in a much stronger position now than where it was even 12 months ago. And then finally, late last year in October, we announced in an investment bank, we engaged them. They're called Architect Partners. They continue to be engaged. And as we announced in October, the reason that they were engaged was because the company had been approached by a number of companies interested in BANXA. And so now they are, continuing those particular conversations. And obviously we can't talk too much about that at this point. If there's anything new, we'll obviously inform shareholders. Just very quickly from a corporate perspective, and these prices are taken as of yesterday, the market cap from a Canadian perspective is about 45 million, which gives us, and there's roughly 45 million shares on issue with a 33 million float. From a revenue run rate, for those that are interested in that, it's roughly 76 million AUD or 50 million US, and there's about 120 team members. Just in terms of the shareholders, board and management hold roughly 20% of the company. So board and management is absolutely aligned with the performance of the business. And then what you'll also see are a number of technology funds, blockchain funds, and family offices. Thorney has been a shareholder really since day one. They run a listed technology investment fund on the Australian Stock Exchange. They're one of our major shareholders. We also have the Qureshi family office based out of Canada, and then a number of other venture funds, including NGC, who's a very well-known venture fund in the Asian region, and then a number of other family offices. And you'll also note we have two of our customers as investors as well. So at this point, I'm going to just stop sharing my screen, and as a prelude to Holger jumping in and giving a really detailed and thorough overview of the business, there's just a little bit of a presentation, a video presentation that we'd like to share with you that just really just paints the picture of BANXA and how BANXA works, and particularly with our one of our major customers called MetaMask. So what I'm going to do now, I'm just going to click play, and then I'm going to hand it over to Holger.
Introducing BANXA and MetaMask. You can now purchase crypto easily on MetaMask with BANXA, using your preferred payment method with lower fees. Whether you're in Canada using Interac, Europe using SEPA, Ideal or Faster Payments, Brazil using Pix, Australia using PayID or Poly, or anywhere with Apple Pay, credit card, wire transfer, and loads more payment options, BANXA makes it easy to purchase crypto securely on MetaMask with lower fees. BANXA and MetaMask, more payment options, lower fees. Try it now on MetaMask.
And for those of you that are not aware, but MetaMask is one of the largest non-custodial wallets in the world. So, a very important partner. So without further ado, I'd like to hand it over to Holger, our CEO, who would basically take you through the business update as well as the financials. Over to you, Holger.
Thanks very much, Dom. And before I start with the business update, I also would like to apologize to everyone, our shareholders, our employees, our partners, and all stakeholders really about the audit delay and the trading halt. Some minor things might have been out of our control, but there was certainly a lot of responsibility that we had to take on internally, and I'm taking that responsibility for what has happened. For me, what's most important is to rebuild and make sure that this never happens again. And I think with Sean, our COO, stepping up to CFO, closing the gap, helping us getting the audit across, and then reviewing everything that has happened and coming up with a thorough remediation plan. And as a result, we've invested in our processes internally, and we've automated things. We've updated our processes, and we've invested in people. That is still an ongoing process, and we will certainly continue investing in that and making that a priority so that this never happens again. I think what's also important is that we want to change the approach how we communicate in the future with the market. I want to step up and manage all external relations, including the investor relations and strategic partner conversations. And I want to have a new philosophy how we communicate with the market. For me, less is more. I want to have the business and the facts speak for itself, because I really believe we've built an amazing business. And I want us all to get excited about BANXA, what it is, and the potential it has again. And that has always been my mission in the background while we were working on the audit and getting listed or traded again. we've really invested in the business and focused on turning things around. And I believe the team has done a great job in doing that. We're certainly not there yet. There's still a lot of work to do. But compared to last year and where we were, I believe we're in a much better position. We're much more conscious and we've learned from our mistakes. And that is an ongoing journey. So with that, I'd like to give you a bit of an update on where the business is today. Just a quick snapshot of a couple of facts. We've been around for almost 10 years now. We've certainly weathered many storms. I'm a co-founder as well, so I've been there from day one. Times have always been tough. I'd say they were even tougher at the beginning. But in this industry, which is just very, very nascent, there continue to be challenges. But I believe experience and expertise that we have acquired over those 10 years really helped us to get through it. Overall, we've sold billions of crypto in this time. We've served over 1 million customers and fulfilled millions of orders. Through our B2B2C model, we've integrated with more than 150 top-tier partners in the industry. And if you look at the names of our partners, you will really see the who is who in crypto. Every platform that has a name and users is using BANXA. And the reason is they don't want to deal with regulation, with payments, with fraud and chargebacks. And we all know regulation is only going to get more, and that is good because we need clear guidelines. But we believe that this service, the product that we provide, is really the gateway in and outside of this industry. And the partners we're working with, they don't need to worry about all this. They have a business to build. If it's an NFT marketplace, if it's a Web3 game, or an exchange or a wallet, it doesn't really matter what there is on the other side. They have to build that business. And if they plug in BANXA and allow us to onboard the users and convert the users' fiat currency to cryptocurrency and back, then this job is taken care of in a world-class manner, because we have the most direct payment methods in many countries, which is trusted and often low cost to the user. We also have credit cards for global onboarding. And we have the accompanying licenses and registrations to do what we're doing, and we're growing that portfolio as well. And that is not something you acquire overnight. It's something that has taken us 10 years to get here, and we continue to do. We continue to invest in that. And then just on the financial side, the cash position at the end of March 23 was around 12 million Australian dollars, $8 million US. So if you go to the next slide, please. We've also updated our mission because this space is always evolving. Over time, we've been focusing on the on and off ramping, the gateway in and out of this space. But what we're seeing more and more is that it's actually an infrastructure play. So we've come up with a mission that we're building the infrastructure to extend the benefits of crypto to every merchant and consumer in the world. And what that means is what Tom in a couple of slides is going to get into a little bit deeper. But where BANXA is positioning itself over the long term is really into more of a B2B player, providing infrastructure layers, if that is compliance, payments, or crypto fulfillment, with major existing companies, payment service providers, remittance players in the world. And again, we'll talk a little bit more to that. Next slide, please, Tom. So again, so far our product has been the on and off ramping, the gateway in and out of the Web3 and crypto space. Last year, we very successfully launched the NFT checkout, which allowed people to buy an NFT, non-fungible token, directly from their bank account or from their credit card. And why that was important is because NFTs have very much opened the mainstream to Web3 and crypto. Specifically through the art world, where people were able to buy pieces of art on the blockchain, unique. And we wanted to provide a Web2 experience, a Web2 checkout to buy those pieces of art. So you didn't have to be an expert in crypto to buy a unique NFT. And our NFT checkout has achieved that, and we have already onboarded many of the top platforms in the space. if that's a NFT gallery, an NFT marketplace, or a Web3 game that is selling NFTs to their users. And these two products, the on and off ramp and the NFT checkout, we're still growing with that. We haven't even scratched the surface, is my view. Crypto is still very, very early. And I see it very much like the internet. Eventually, it's going to explode. And we've been there. We are building that infrastructure layer step by step. But as I said, the embedded crypto infrastructure is really our longer term game plan. We're already co-creating with some of the largest payment service providers, PSPs in the world, and remittance companies. Cannot name any names yet, but that is very, very promising and exciting because they don't have the expertise, the technology that we've really built over the last 10 years. They don't necessarily have the licenses. They might have the payments, but if not, we also have payments all around the world. So we see a very, very big benefit of breaking up this infrastructure that we've built into single modules that then the industry, traditional industry, Web 2, Web 3 can build on top of. And that's where we expect a lot of scale from. If you go to the next slide, please, Dom. We just want to show here how we've also evolved with the market. We've started serving centralized exchanges, the Binances, the KuCoins, the OKXs of the world initially. But over the last 12 months, we've seen a big pivot to more the decentralized space, non-custodial wallets, DeFi and NFT platforms, and Web3 gaming. And BANXA has really done a great job in acquiring those top tier platforms in all sorts of segments so that we have really diversified our portfolio. And again, we believe that we're just scratching the surface here. This is constantly evolving and we're able to adapt and grow with the market. And just a quick overview again of how we're evolving our payments in various markets. We certainly have global coverage through credit cards, Apple Pay, Google Pay. However, what we really see as an advantage are the local payments in several markets. And it's not easy to get a local payment. In Australia, for example, you have to be on the ground, you have to be registered with the Transaction Monitoring Authority, you have to do the reporting, you have to have an entity and directors, and all that sort of stuff. And we are doing that. We're going on the ground because we believe that having a local payment is just a more trusted option for our users. A bank-to-bank transfer has a 100% conversion rate over credit card. And it's mostly cheaper or free, and you can push much bigger volumes through it. So overall, we're quite excited about this strategy, and we continue growing. After we've started last year entering a number of Latin countries, we're now focused on the APAC region as well. Next slide, please. And just a couple of quick facts of the milestones we've achieved just until March 23. We went live with more premium partners, MetaMask, Bitmark, The Graph, Zengo, Atomic Hub, and a couple of these have quickly become our top 5 or top 10 partners, which is really, really good to see how the team has focused in on the big ones and continues to onboard them. We've also launched a number of local payment methods, like I said, in Latin America, also Thailand as a first step into the APAC region. And as you know, we've announced it before that we are acquiring US money transmitter licenses. We're at 28 at the moment. We believe we should have the 40 that we applied for in the next 3 to 6 months. So that is going quite well. And then never a dull day in crypto. After a number of US banks collapsing, we were able to create fail-safes and ensure that our money is safe. So we have a number of US banking relationships today so that we always manage our risk. We attended a number of US trade shows and exhibitions over the last 6 months as well. And coming from that is a really strong sales pipeline. The other thing that we have done on the product front is we offer KYC sharing with our major partners. And what that is if a user is already KYC'd with one of our partners through their mechanisms and processes, we would share those, or they would share those KYC details with us so that their users don't have to go through a second round of KYC. And that has just increased the conversion rate by up to 40%, which is really big for us. And again, we just want to remove the barriers to entry, and that is a big drop-off point, the KYC or identity verification. We've been joined by Ari Last, who's been with Simplex, one of the competitors, for many years. Ari is leading our sales team, and we've seen some really great results from him after he joined us late last year. And we're really excited to have him on board, and we continue to working with him on getting more premium partners on board. We've also announced a number of paid services, which are integrations, custom integrations for partners that need a bit more tailored work with their platforms. And also, if a platform wants to list their token, we certainly do a very comprehensive compliance assessment, and then we're charging a fee to list those tokens on the BANXA platform. And over the last 12 months, due to the market certainly, and where everything has, how everything has worked out, we also did a major restructure last year. We've had to, unfortunately, let a number of team members go. We've grown very, very quickly. So we've turned things around, and the goal for us now getting to profitability as soon as we can. And as a last point, what we historically have been done, we focused on the product. We haven't really gone out there and talked very much about ourselves. Maybe that's one of the reasons that our valuation compared to other competitors is very different, much lower. We've now appointed a US-based Web3 media agency, Waxman. They're extremely well known in the space. If you go to the next slide, Dom, we can see a couple of examples of what they've already achieved. We are getting into some major publications like the Forbes and Reuters and CNBC. We're being asked for commentary on the latest developments in the space, and there's certainly in the US a lot going on at the moment, and then also for thought leadership. So that's going well, and you'll certainly see much more of BANXA out there in the future. With that, I'd like to hand over to Tom for a bit of an update on our way forward, the embedded crypto strategy.
Thank you, Holger. So we really at this time are looking at three major markets increasing in size. So BANXA really found its original product market fit in the centralized exchanges, and for the last few years, they've certainly been our bread and butter and where we've grown. As Holger mentioned earlier, though, where we found tremendous success in the last year is actually in this different space, which we broadly call crypto enablers. What that means is really it's that pure crypto movement of self-custodial wallets or Web3 wallets as we know them, protocols, DeFi exchanges, DEXs as are otherwise known, marketplaces, and NFT marketplaces in particular. And I guess while the last year has been a very brutal bear market in many ways, the way we often thought about it is actually as a build market, and inside the crypto sphere, building never stopped. And what we've seen over the last year is this incredible amount of innovation, particularly in those self-custodial wallets, with some really radical improvements to the user interface and the way they onboard users in particular. And they now account for about 50% of our volume monthly. So that's been a tremendous source of growth for us. And that's just one pillar, though. So we do expect that one to continue growing and to be a really strong source of growth over the next year. We estimate at this point that market is about 35 to 50 times larger than we've so far been able to capture. So there's certainly a lot going on there. But I guess where to ultimately and where we see what we really believe to be the 1000x opportunity is in what we call general markets. So that is the use of crypto in a more general sense, in a more sort of native, behind the scenes and embedded sense. And that's really very much working with the likes of major payment entities, fintechs, banks and neobanks, technology providers, and particularly gaming and social providers. And I guess to contextualize that a bit, I actually want to wind the clock back a decade or so to talk about another movement that took place back then. And that was really the movement, if we go to the next slide, Dom, of embedded finance. And you know, the best way that we think about that is, you know, that there was a time where if you were a merchant online, you could go and get, you know, one of many providers to add a credit card form onto your website. And that did the job in the early days of the internet. But you know, with the rise of these kind of second generation, third generation payment providers in the 2010s, particularly prevalent being Stripe, they envisioned this world of a much more kind of seamless, embedded, turnkey and white label payment experience where they put payments right at the heart of someone's business and allowed these digital businesses to actually control that experience and bake it in very natively. So the best example of this is Uber. We like to think of Uber, I think nowadays, as a transport company, but fundamentally Uber is a payments company. And one of those magic moments we all had when we first used it was that you put in your credit card and you only ever did it once. And from there on out, you just called the Uber and it did its job for you. So a classic example of embedded finance. We see a world much bigger and much more exciting than that. And we actually call that embedded crypto. And, you know, our really strong view, if we go to the next slide, Dom, is that in 5 years' time, just the same way as today that every company is a payments company to some degree and that they need to run off these systems, every company will be benefiting from crypto technology in some capacity. And that's going to unleash a really massive wave of economic innovation. It's going to bring those great benefits of crypto that we all love: decentralization, permissionlessness, composability. It's going to bring that to all these systems in the world. And obviously, you're going to need players like BANXA and others to make that a reality and to sort of facilitate that movement. So we're here to make that happen. We're excited to make that happen. And what we're really building towards is what we call this programmable-based platform. And what that means is, you know, over the coming years, there's going to be many features that we're going to continue to add to our product today as we know it. And that's things like more payment methods, more ways of doing payments, more networks and tokens we can deliver to, more places and spaces. But, you know, the biggest story behind all of that is what's happening is BANXA is transforming itself from, I guess, a product model or a one-to-one product model to really a platform that's much more modularized, and it's much more turnkey, and is much more putting itself right at the heart of businesses that want to use and extract these benefits of crypto. So we're really excited to go on that journey, and you're going to be hearing a lot about that over the coming months and years.
Thank you, Tom. It's super exciting. And I guess when I heard the full new roadmap and strategy first from the product team, and we've worked on this, it was at the beginning a lot to take in. It's very visionary, but for us, it's really super exciting of how this space is evolving and which role BANXA can play. And we've come up with a whole new narrative, our mission and vision. Waxman, our agency, has been helping us very much with that. And in the next few weeks, you will see a lot more about this embedded crypto narrative. We'll also do a website refresh, which will explain it much better and be much more out there talking about this in much more detail. Today was just a preview. I want to give a quick financial update and apologies for Sean, our CFO, not being here. He just had his second baby and it's 1 a.m. or 1:30 now in Melbourne. He's probably up anyways from experience. But I said that I'm going to take over this part for him today. So just a couple of numbers to update you. The last 12 months were really, the FY22, which is obviously 1st of July 21 to 30th of June 2022, the Australian financial year, which is now audited finally, was really a mixed bag of first half bull market, second half bear market or build market. And we've been seeing the full brutality of it. Overall, the transaction volume grew to 1.4 billion Australian dollars. The revenue grew to 71 million Australian dollars. Our gross profit grew to 20 million Australian dollars. But we did have a loss of $60 million because we invested so heavily in the expansion plans. And in the first half of that year, we've just seen so much growth. We added resources to be able to deal with that. And again, we've certainly made a lot of mistakes during that time that we are learning from. And then as a result, the lowest point was really in June last year, where we right-sized the business and did some major cuts across the board. What we did then in the last 12 months really was to turn things around, and we were able to grow the business from that lowest point again. We were able to constantly grow our TTV in the last 4 quarters. The June quarter has just finished, and we are at around 215 million Australian dollars. So another increase of the green bars here, and we're able to just on a quarter by quarter comparison for the March quarter 23, the revenue is up to 24 million Australian dollars. Gross profit is up 5 million Australian dollars. And we have an operating income of 0.6 million Australian dollars, but that is only due to a write back of share-based expenses of 2 million Australian dollars. The trend, though, is really important, and the focus of the team on growth and doing that in a very lean way, I think is super important. And then the adjusted EBITDA is a loss of 0.9 million Australian dollars. And again, I just want to highlight how we've weathered the storm in the last 12 months. The blue bars here show the exchange traded volume in the market, and the black line is the Bitcoin price. And they've been trending down in the last 12 months, while BANXA was able to get new customers and stay quite strong with our margins as well. So it's not volume at every price. We really wanted to keep the margins where they needed to be to get us eventually to profitability. And we're well underway. But like I said initially, it's still a journey, and we're not there yet. But we hope that you stay excited and that we can regain your trust, and that you probably understand a little bit that crypto is just a very, very nascent technology. Unfortunately, it always swings in extremes, in a good way and in a bad way. And because retail investors can now participate in every instrument in crypto, there are very, very big volumes that are being handled. And unfortunately, bad actors have taken advantage of that as well, which has led to collapses and losses of platforms. And unfortunately, that has made retail investors lose their money, and the regulators are coming in now. And that is always a challenge for us, but we want regulation, we want clarity, we want clear guidelines. We're lobbying for that. And we continue being a very active member of Blockchain Australia, the industry association that we co-founded. And globally, we're taking this role very serious as well. But we are realizing that this is still a very, very early market, but where we know how to navigate in. I think that's really important. With that, I'm going to hand over to Dom for a couple of comparables in the market before we get to Q&A.
Thank you. Thanks, Holger. And I'm going to sort of partly answer a message from one of our shareholders. Tim asks, in respect to M&A on Architect Partners DD that I glossed over, it's been 9 months since the reception of those particular offers. I think the answer there, Tim, is while a company's in a CTO, it's actually very difficult to be engaging in any kind of M&A process. And so now that the company is relisted, Architect Partners is doing their job. Just to give everyone some context, we engaged them late last year because we had received 2 proposals for the company. And as a public company or just a company with shareholders, from a governance perspective, what does a board need to do? A board needs to engage an investment bank to help it review the proposals. So, they're still there and will update the market. As part of that, Architect Partners produced a number of comparables. One of the questions also has come through around who are some of our competitors. And as you can see here, some of our competitors are MoonPay and Ramp and Zero Hash. And if you look at that, they've raised money at some fairly material valuations, with MoonPay being the strongest at $3.4 billion and Zero Hash being at $340 million. But if you sort of take your eye towards the the circle that's there, and if you go to the top towards BANXA, you'll see that the valuation versus the revenue is under a 1x revenue to EV or enterprise value multiple. So BANXA, as of today, is trading at less than 1x revenue to its market cap. While if you look at some of our competitors like MoonPay and Zero Hash, they're all in the double digits. And if you go right down to the bottom, Simplex, which was one of our competitors, was acquired by Nuvei at 14 times. So, I guess we'll let investors judge their view on the valuation of BANXA based upon this. And then the next slide just goes into much more details with regards to other public companies that Architect Partners has put together. I'm not going to go through this. This is really for those of you that are keen analysts who would be more than happy to review this in detail. So that really concludes the formal part of the presentation. Now we're going to open it up to a number of questions, and I'd ask Holger to basically come back. And maybe I can just read out some questions, Holger, and maybe there are some answers here. It's like Wesley asked, which company is BANXA's biggest competitor? And I guess how are we dealing with that? Because I think that's a good question. Go ahead.
Yeah, totally. I still believe MoonPay is our biggest competitor. They are based in the UK and the US. They have been around since 2017. And they raised $500 million US, which is amazing on a $3.5 billion valuation. However, they have focused very much on the NFT space and the NFT celebrity space. But we see MoonPay competing with us in a number of platforms. What we've seen over time, though, is that the local payment options that we have, and again, we have the most direct payment options. We're in the most countries with our own licenses as well. That is what is really important to our partner platforms. And we're just able to have higher conversion rates. And our partners and their users really care about the conversion rates. So while MoonPay on every metric might be bigger than us, I believe on the actual converting of the users, and that's all it counts, because when you go to the ATM machine, you want your money. And we do that for you. We convert your fiat currency to cryptocurrency. And that's what we continue working on, with getting more payments and constantly working on removing friction and optimizing our conversion rates. And we've seen in direct comparison a lot of uptake of BANXA over MoonPay. But I don't want to talk badly about any competitors. They're doing a great job. They've done a great job on marketing and on raising their capital. So kudos to them. But that is definitely our biggest competitor, as I see it.
Yeah, and maybe another one for you, Holger. Michael asks, what are you most excited about BANXA and why? And maybe this is one for Tom as well, also from Michael, is how would you size up the market opportunity in embedded finance, such as the door open to you with the Graph, which is a recent deal that we announced? So maybe you guys can touch on both of those points.
Yeah, totally. I can start, and then Tom, you can probably dive a little bit deeper into it. But yeah, embedded crypto is for me the most exciting part. I believe we've done an amazing job with our on and off ramps. And again, the who's who of the market is trusting BANXA and leveraging BANXA with so many millions orders processed and continuing to do so every day. Things are going very, very well, but we've probably only scratched the surface on really getting BANXA as it is today into more platforms and more users. And we'll definitely see this going up once the market is in a better position as well. So there is still so much potential with our existing products. But then the embedded crypto infrastructure play is what I'm most excited about in the future. And like I said earlier, we are already working with a number of payment service providers, for example, or remittance companies, on how this can look for them, how we can have a few infrastructure layers for them that they can build on top of. But Tom, you're the expert, and I'd love to get your view on this as well.
Yeah, absolutely. I guess it's to size up the market opportunity. You know, Circle actually does a great job of communicating this and in their investor deck, but we see it very similarly in that the global payments market is 35 trillion. And if you do believe in crypto as a use case as money, that's the total eventual size for it. And that's just one component of it. So that's super exciting to us. And the way we kind of view that is it's similar to us being one of the early companies on the internet that had figured out how to tokenize cards and move that payment data. So it's an incredible space to be in. The way we would size it up initially is by vertical, and what sort of verticals are going to be the ones that more immediately would want to use crypto as a payment or a settlement mechanism. So we've had some very strong interest from different verticals in that regard. Two that we think would come online relatively quickly. One is the gaming market, and the other one is the data services market, and that's very much what the graph is doing.
Thank you. John asks, and this is specifically with regards to the MTLs, the money transmitter licenses in the US. BANXA is missing licenses in New York, Louisiana, and Hawaii. What is your plan to obtain these licenses, especially in New York? Yeah, great question. New York's obviously the BIT license, which is very challenging. You need to have a number of $1 million in the bank account just for obtaining that license. How we've entered the US historically was through a local settlement compliance provider called Zero Hash. And we've seen, and we've been working really well with them together. We still do that today. They do have the BIT license as well, which we are about to leverage. We haven't applied ourselves for it at this stage, but that is an option in the future. Once we have acquired all the MTLs that we want ourselves, we will obviously activate them for ourselves, but also continue working with Zero Hash. Because for us, it's just, especially in this industry, important to have backups, redundancies, and always find the best route to the customer, which has the highest conversion rates, the lowest costs of delivery. So overall, the US stays our strongest market, and we obviously want to make sure that we have the best access to this market, and eventually we're going to leverage our own MTLs here. Yep, that makes a lot of sense. Habib asks, besides MoonPay, do you consider BANXA as the number 2 in the marketplace in terms of on and off ramping? So that's a question. Yeah, I was wondering if I should. Yeah, it's a good question. I was wondering if I should make a comment about where BANXA is in terms of volume. There are no real facts out there about who's the biggest and where BANXA sits, but from what we hear when we are in a large platform, BANXA is probably top 3 globally. MoonPay is the biggest, no doubt, but from the pure on-ramps, I would say. But please don't quote me on that because there is no data out there. We are speaking with our partners. Many of these partners have a number of on-ramps integrated, and we get the feedback from them how much volume we are doing versus everyone else. And together with some other feedback that I've gotten from the market, that is where I would say we are positioned. But then there are also large companies like a PSP, WorldPay, for example, that service a number of centralized exchanges directly with credit cards, for example.
And these are also competitors. They're large. However, they cannot do what we're doing. We certainly have much better technology. We have the licenses. They require the exchanges to get the licenses. So it's a bit of a mixed bag there. And they wouldn't be able to service any non-custodial DeFi platforms. That's why they are, several PSPs are interested in working with us actually as an extension. And that's where the Sol embedded crypto strategy is coming in.
Yep. We have a few questions from Anthony and Habib around the relisting and what initiatives does the company have in order to increase shareholder value and obviously the share price, and why did we choose outside of the box marketing? So if you can maybe talk more about the strategy moving forward, Holger.
Yeah, absolutely. Like I said earlier, I really want to take the lead in investor communications and speaking with the market and the partners and be much more visible. Historically, we've been focusing on the product. We believe we've built a superior product, and that is great. But if you don't talk about it, if you don't promote it, it's a challenge, especially if you're a listed company. You have a very important audience, your shareholders as well, that need to get the updates. And unfortunately, in crypto, the market can be quite noisy. Everyone's screaming. And while my nature is more conservative and just focusing on the numbers and getting things done, I believe for us, it's really important to get out there, talk about the good things we're doing. And we haven't done that as well as we could have in the past. And that's why we engaged outside of the box and Waxman specifically to get us much more out there and engage with the market. But again, my philosophy is let's focus on the facts and really only communicate what matters. And what matters to our investors, what matters to our partners and their users to have a really good experience, and everything else will cut out because I believe the real value is what we're building every day, and we can see that with attraction. And I've had another question before: how many partners have actually switched BANXA off or churned? And the answer is, I think. Maybe a handful over the last 10 years, because what we do is good and is needed, and we continue improving the product. And maybe sometimes only we switch a platform off because they don't go through our ongoing due diligence. But historically, and I'm knocking on wood, we haven't been switched off because of poor performance. So we're really striving to improve every day.
Another question from this reverts to our balance sheet. Usama, other than saying thanks for the hard work, Holger and co. Usama, I totally agree with you that the team's done a fantastic job. He mentions the company could benefit immensely from a revolving facility to fund accounts receivable, which ties up a lot of cash as per the financial statements. So, what is being considered is kind of one question. And then secondly, why is BANXA so undervalued compared to its competitors, and what are the plans to reduce that gap? So the first question is really a balance sheet type question.
Yeah, thank you, Osama, for your kind words. Look, in terms of the liquidity, as we're growing, we certainly need more liquidity. And what's important for us is to get that liquidity in the best way, in the cheapest and most risk-free way. What we are working on with our payment service providers, our acquirers, are some sort of factoring facilities. So ideally, we can get T plus 0 settlements, so immediate settlements, 24/7 of our outstanding of the outstanding payments. And while we're working towards this, also with the help of stable coins, which many of our acquirers have already started, we still need external facilities to fund the growth. An equity raise is certainly one option to do that, but again, we want to make it in the cheapest and risk-free way with the least dilution, obviously, for all shareholders. So we're continuing to explore all ways, if that's in crypto or through factoring facilities or through other loan type agreements with stakeholders. And we just want to fund the growth that we're experiencing in the best way possible. So yeah, that's hopefully answering your question.
Yeah, and just on that, just to provide some context to that question for maybe some of the new shareholders in the company, BANXA's business model works on the basis that we will sell a coin to a customer, and we then get paid from our upstream providers, for example, MasterCard and Visa, on a T+2 basis. So there's a working capital gap from when we sell the coin to when we actually receive the cash. And we have a number of debt facilities in place. As Holger mentioned, we are currently exploring a number of other debt facilities because the cost of capital there is much lower than equity, and we're obviously very concerned about dilution. But your point, Osama, was right. We are looking and exploring that, given that the receivables does make up a large part of our balance sheet. And Holger, the other question was around, in terms of marketing and IR and what are some of the plans moving forward? And I've got some specific questions around, what does outside of the box specifically do? I've had a couple of those particular questions, which you can maybe touch on.
Yeah, outside the box is basically doing shareholder engagement. They're spreading the word about BANXA as a stock out there, and they're just engaging with the market to talk about BANXA on different platforms and just raising the awareness that there is a company that is building the infrastructure for the crypto ecosystem, that we're just starting really in terms of where the market is today and what we're expecting in the future. Yeah, they're basically embedding themselves in these platforms and engaging with potential shareholders to spread the word about BANXA and share some of the good news that we're coming up with.
Yep. John asks to clarify, is the BANXA stock trading again on the TSE? Yes, it is under code BNXA. And when will you make available BANXA's unaudited financials? So for 30th of June, the 30th of June accounts are due 60 days after the end of the month. So we're talking at the end of August. And then the full year audited accounts will be available at the end of October, just to set some expectations. And one for you, Holger. Kyle asks, what is your estimated time frame in order to be profitable?
Yeah, it's a good question. I really want to get there as soon as possible. In the last couple of months, we certainly had some extra costs due to the whole audit delay and the trading halt and a lot of compliance and regulatory work that needed to be done. But really, I want to get this done in the next 6 months or so. In general, it depends on the market as well. But I am seeing really good signals from the market. I believe the lowest point has been passed in the crypto macro environment, with the Bitcoin halving coming up in late April, early May next year. There's usually a rally, a Bitcoin price rally leading up to this, and hopefully some other macro events have resolved until then. So overall, I'm quite optimistic after, again, a brutal year where we've managed to turn the ship around, but are still not there. There's still a lot of work that we need to do. But I'm quite confident that the signals that I'm seeing are pointing us in the right direction, and things will get better. And the focus is certainly on becoming profitable.
Yep. We've got a couple of questions that were emailed in around the US and specifically around the MTLs, and what new regulatory concerns, if any, do you foresee in the US market, and what is BANXA's position about the future of US operations?
Yeah, again, US market it's super exciting for us. Many platforms are being built in the US. Many users are coming from the US, and we believe there's currently a little bit of a shakeup in terms of regulation. Crypto is often described as a Wild West, and I believe some platform collapses that we've seen over the last 12, 18 months have contributed to that. And the regulators are coming in, but unfortunately they're coming in with heavy enforcement, is what we're seeing against Coinbase or Binance and other platforms. For us, it doesn't change so much, other than we really want the regulatory clarity, and want to continue working with the regulators on creating these clear boundaries so that users are protected, and that companies are doing the right thing. So the US will continue to be a key focus for us. We will have, based on all the experience we have in building this business over the last 10 years and the relationships with banks and regulators, we will have a number of redundancies, meaning our own licenses and other partners as well that can help us with that. But yeah, overall, we remain very excited about the US and want to continue investing in it.
We've got some other questions from Anthony. What would you consider to be the end goal here? Is the goal to sell BANXA to a strategic suitor, or to continue forging the path as an independent entity? And then I've got some other questions around, do we still plan to sell it around, X dollars, or what kind of consolidation is looking in the space? So I guess there's some, let's call it, common themes around M&A that I think are worth touching on. Holger, did you want to make any comments on that?
Yeah, I think we never really intended to look at this until we were approached and saw these synergies with some of those companies that are already quite large in the space, a payment service provider historically. And what we are doing and what we've built in terms of technology, and again, the licenses and all the expertise, and we have a team of 120 crypto natives. That's quite rare. And eventually we believe that every business needs to play a role in crypto, or that crypto plays a role in every business. And BANXA is very cheap, obviously, compared to other platforms or comparables that do similar things. And payment service providers often grow by acquisitions. So it is certainly an option, but we with the goal of becoming profitable, I believe that BANXA just needs to get through this bear market. We need to be in control. We need to be self-sufficient. We need to continue executing on our mission and vision. And that will not put us in a corner with little options. But we are certainly open for the right partners at the right time, at the right price, where we have the maximum shareholder value, so that everyone benefits. So it's a very vague answer, but I can't look too much in the future. We're very open to every opportunity. And overall, again, we've just started really. There's much more to come, and the last 10 years have seen that have shown that there are just many cycles, and we are waiting for that next cycle, and we're very excited about this, and we'll make things very different and much better this time around from all the learnings we've done.
We're just about to wrap up. Just to sort of comment, and I'll put my shareholder hat on. My view is, any company, the directors and the management should be focused on building a good business. And if we're able to build a good, solid business, M&A opportunities will come. I don't think we should start with M&A. We should start at how can we provide and build a good business for our customers. Now we've got time for one more question from Uzama. South and Central Asia represents vastly underserved markets that, as they face local currency pressure. Any plans to increase the presence in that market? And this will have to be the last question that we answer. Over to you, Holger.
Yeah, absolutely. It's a super exciting market, huge populations, obviously, and we're very much looking at that. We already have entities in the Philippines set up, and we have a dominant entity in Singapore. Australia is obviously in a very good time zone for serving those markets. And what we believe is coming out of that region is also Web3 gaming. Gaming is very dominant in these markets. And Web3 gaming, we believe, is one of the next big things. Turnovers in this space are huge. People are paying a lot of money for in-game assets, and we think that BANXA can play a major role there. So these markets are definitely interesting for us. I don't know, Tom, if you have anything on that you want to add in terms of roadmap for APAC.
Yeah, so nothing in particular to share at the moment, but it is definitely of all the regions in the world that we're studying very closely and looking to the general makeup and how we could best serve it. It's the #1 region we're looking at right now.
Fantastic. Thank you. Thank you, Holger, Tom, and thanks to all of our shareholders for dialing in, and thanks for everyone for participating and sending questions. We will now close this particular webinar. We will make this available online in the next few hours, and looking forward to further webinars in the future. Thank you, everyone, and have a great day.
Thanks, Tom. Thanks, everyone.
Thanks, everyone.